One of the biggest stories this week came from Fed Governor Christopher Waller, and he's a possibility for the next Fed chair. He pointed out what many of us have been saying, and you've heard in my updates. Basically, the labor market's not as strong as headlines make it sound. Fewer people are quitting jobs. Now we're seeing teen unemployment's rising, and new hires are slowing. He also said that AI is causing hiring delays. And basically, in plain English, the job market's softening. It's not great for society, but it is good for mortgage rates. Waller also made it clear that tariffs, which has obviously been a big political headline, are just a one-time bump in prices, not necessarily ongoing inflation. And that's really important because it means the Fed doesn't want to overreact. He does believe rates are about 1.5% too high and that the Fed should have already started cutting. And markets are now, saying a September cut is likely, but it's not guaranteed just yet. Next week's job reports could change things, and we're going to get another inflation reading before the Fed makes that call. On the inflation front, the PCE report, that's the Fed's favorite measure of inflation, did come in as expected. But the problem is that it's still overstated because of how housing costs are measured. And the official numbers do say shelter costs are rising, while real-time rent reports show that they're flat and even down in some cases. And that mismatch is keeping the numbers hotter than they actually are. And for housing, we saw pending sales dip a little bit, but existing sales are still showing life. Inventories higher than last year, which does give buyers some more options, meaning sellers need to be strategic. And I've been helping a lot of people to improve affordability and market their listings using that. Just reach out if you could use a hand there. Rates didn't move that much this week, but they are a little better than last Friday. And the bigger tests will come, like I said, with next week's jobs reports. And if those numbers confirm some more weakness in the labor market, the Fed should have that green light to start cutting in September. And that could help ease mortgage rates because the reasons for those cuts all help mortgage rates. A weaker labor market, less strength in the economy, and lower inflation numbers. So enjoy the long weekend. Things will probably heat up again right after Labor Day. And I'll be back Friday to let you know how it all shakes out.